All right, let's talk about a classic problem in global trade. If you sell goods internationally, you want to get paid right away. But if you're buying them, you want to pay later. This tension, it's at the very heart of almost every deal. In this explainer, we're going to dig into an elegant solution that lets both sides get exactly what they want.
So, at the core of just about every international deal, there's this natural friction. It's a fundamental conflict that really just boils down to one simple question. When does the money actually change hands?
I mean, put yourself in their shoes for a second. As the seller, you've just shipped your product halfway across the planet. Of course you want your money now. But as the buyer, you need time. You need to get those goods, probably sell them, and make some revenue before you can pay up. So the big question is, how on earth can you make both of those things happen at the same time?
This is what we call the classic cash flow tug of war. The exporter's whole goal is to get paid at sight. That means immediately, so they can shrink their days receivable. Meanwhile, the importer wants to do the exact opposite. They want to delay payment on a deferred basis to stretch out their days payable. They are literally pulling in completely opposite financial directions.
So how do you bridge that gap? Well, the answer is in a really innovative financial tool that basically builds that bridge for you. It's called the UPAS letter of credit.
Now, UPAS stands for Usance Paid at Sight, and that name perfectly describes how it works. See, it starts as a usance, or deferred payment LC, which is exactly what the buyer wants. But then a financing bank steps in and pays the seller immediately, at sight, which is what the seller wants. The bank is literally creating a financial bridge, connecting what both parties need.
And that right there, that's the magic. It is truly the best of both worlds. The seller gets their cash flow sorted out instantly, and the buyer gets the extended credit terms they need to run their business. It just solves the dilemma.
Okay, so let's break down the specific, concrete advantages here, because this isn't just some clever financial trick. It delivers real, measurable benefits to absolutely everyone involved in the deal.
For the exporter, getting paid at sight is a total game changer. It juices their cash flow and makes their products way more marketable, since they can offer these really attractive payment terms. And for the importer, well, they get to extend their days payable, tap into a new source of liquidity, and honestly, they often get a better financing rate than they would with a standard local loan. It's a clear win-win, no doubt about it.
And the benefits go even deeper than just cash flow. Because the seller is paid right away, they don't have to build financing costs into their price. That can lead to more competitive pricing for everyone. Plus, the whole deal is still secured by a letter of credit, so that foundation of trust is rock solid, which just strengthens the entire trade relationship.
Okay, so this all sounds fantastic in theory, but you're probably sitting there thinking, how does the money actually move? How does this whole process work in the real world? Let's walk through the mechanics.
The best way to think about it is like a well-choreographed dance between banks. It all kicks off when the importer's bank issues the UPAS LC. Then, a separate financing bank confirms it. The exporter ships the goods, hands over the documents, and here's the most important step. The financing bank pays the exporter immediately. From there, that financing bank just waits to get paid back by the importer's bank on that future maturity date. I know, that's a lot of moving parts. And let's be real, the world of trade finance is notoriously complicated. All those rules and documents and different banks, it can feel pretty overwhelming. But that complexity, it doesn't have to be a roadblock. The key is turning all that chaos into a clear path forward. And that's where having an expert partner becomes absolutely essential.
This is exactly where specialized trade finance consultancies come into the picture. Their entire reason for being is to be that expert guide through this financial maze, helping businesses unlock all the growth opportunities that are kind of hidden inside these complex structures.
So, to make this really concrete, let's just look at an example. A firm like Trade Finance Solutions Bangladesh, or TFSB, they act as this kind of gateway. They specialize in structuring these complex import and export financing deals for their clients.
A huge part of their job is having the right network. For instance, TFSBD has working relationships with over 35 global banks. I mean, that's the kind of massive network you need to be able to shop around and find the most competitive financing offers for these UPAS LC deals on behalf of a client. There's a quote from them that really sums up their approach. Our objective is to guide our importer and exporters through the maze of rules and practices. And that shows you it's not just about getting a transaction done. It's about educating clients so they can navigate these tricky waters with real confidence.
The metaphor is a powerful one. International trade really can feel like you're climbing a mountain. And having a trusted partner there to guide you through the really challenging parts, well, I can make all the difference in actually reaching your business goals.
Which brings us to our final thought here. For anyone out there who's buying or selling across borders, it's really worth asking yourself, could a powerful and flexible tool like the UPAS letter of credit be the very key you're looking for to solve your cash flow challenges and unlock your next big phase of global growth?